Hey there, VitalCash enthusiasts. Welcome to our channel. I'm excited to dive into today's video with you. We got something special in store for you. Today, we will talk about 5 assets capable of compounding and enriching you year after year. In this video, you will discover the secrets to building lasting wealth through smart investments. We will unveil 5 powerful assets that can compound and grow your money year after year. So stay tuned to uncover information that can transform your financial future. But before we get started, if you haven't already, make sure to subscribe to the channel and activate the notification bell so you don't miss our future tips and wealth-building strategies. Well, let's begin by unveiling the secret of the magic of compounding assets. Imagine having a small pot of gold. Compounding is like a magical spell on that pot. Instead of taking the gold you've earned, you leave it there, and guess what? This pot begins to grow, not just from the initial gold you put in, but also from the extra gold it earns over time. It's like planting a seed in your garden. At first, it's just a small sprout, but as the days go by, it grows into a tree, and this tree starts bearing fruit. But here's the magic. It doesn't just give you fruit the next year. It gives you even more fruit, because it's bigger and stronger. Compounding works the same way. Your initial money grows, and the next time, it earns even more. Like a snowball rolling down a hill and getting bigger and faster as it goes. Think of compounding as little money offspring making money of their own. They grow and make even more little money offspring. It's like an infinite cycle of financial growth. And the best part is you don't have to be a financial genius to make all of this work. It's about being patient and letting your money do the heavy lifting. To put it simply, do you know your favorite restaurant's loyalty cards? The more pizzas you buy, the more stamps you get. And one day you get a free pizza. Compounding is a bit like that free pizza. The more money you invest, the more it multiplies, giving you a bonus. Your financial free pizza. Compounding assets can be stocks, real estate, or even your small savings account. It's not about having millions to invest. It's about starting where you are, even if it's just a few dollars. It's like planting a small seed. Over time, with the magic of compounding, that little seed can grow into a big, sturdy wealth tree. So, in a nutshell, compounding assets are like having a money tree that grows and continually gives you more fruit without planting new seeds. It's the ultimate secret to growing your wealth, and it's right at your fingertips. So plant your financial seeds wisely and watch them blossom into a forest of financial freedom. This is the power of compounding assets. It's not just money that grows, it's your dreams, $1 at a time. Number 1. Stock market. Well, let's move on to the first of the 5 compounding assets that will make you richer every year, which is investments in the stock market. Imagine the stock market as a vast marketplace where you can buy a slice of your favorite companies. It's like owning a small piece of Apple, Google, or any other company you admire. Now let's dive into the details. When you buy a share, you're effectively buying a small ownership stake in that company. It's like having a small slice of a big cake. As the company grows and profits, the value of your ownership stake increases. Ever heard of companies like Amazon and Tesla? Well, they started small, but look where they are now. That's the power of the stock market. But there's one thing. The stock market can be a bit like a roller coaster, with prices going up and down. That's why it's essential to think long-term. Imagine it as planting a tree. At first, it might seem like not much is happening. But over time, it becomes stronger and taller. Stocks work similarly. Over the years, they tend to grow, especially if you pick solid companies with strong foundations. An excellent example is Amazon's growth. It was once just an online bookstore, but over the years, they expanded to selling everything. Now they're one of the world's largest companies. If you had invested in Amazon at the beginning, you'd have a nice chunk of money today. But there are risks. Yes, the stock market can be unpredictable, but historically, it has shown a consistent upward trend. It's like a wave that can have ups and downs, but the general direction is forward. That's why experts often advise not to put all your eggs in one basket. Diversification is the key. Spread your investments among different companies and sectors, like technology, healthcare, or energy. This way, you'll reduce risk because even if one company or sector doesn't do well, the others can balance it out. So, investing in stocks is one of the most powerful compounding assets. And if you make the right choices and are patient, you can watch your investments grow over the years. Number 2. Real estate. Now let's move on to the second compounding asset, that is real estate. Real estate investment has been one of the most classic ways to build long-term wealth. Just like stock investments, real estate investments can benefit from compounding. When you buy a property, like a house, an apartment, or a commercial building, you have the opportunity to grow your wealth over time. Here's how it works. Let's say you buy a house and rent it to a tenant. Every month, the tenant pays you rent. These rents represent a constant stream of income, and over time, these cash flows accumulate. Furthermore, the rental amount can be increased periodically to grow your passive income. Over the years, the value of your real estate property can increase, allowing you to sell the property for a higher price than what you initially paid. Another way to leverage compounding in the real estate sector is by purchasing additional properties. Use the proceeds from the sale of one property to buy another, and so on. This allows you to create a chain of compounding properties, generating steady income and an increase in the overall value of your properties. The real estate market is a long-term game, requiring patience and effective property management. But with time, compounding can lead to significant growth in your wealth. Number 3. Saving accounts. Now let's move on to the third compounding asset, which is the savings account. A savings account is a straightforward financial tool, but it can be effective in growing your money over time. In a savings account, you can deposit money that will earn interest. This interest is added to your balance and calculated on the interest you previously earned, making it an excellent tool for compounding. Most savings accounts offer an annual interest rate, which means you will earn interest on your savings each year. Here's how compounding works in a savings account. Let's say you have $1,000 in your savings account with an annual interest rate of 2%. At the end of the first year, you will earn $20 in interest, $1,000 into 0.02. So you will have a total balance of $1,020. Now in the second year, the 2% interest rate will be calculated on $1,020 instead of $1,000. Therefore, you will earn $20.40 in interest, bringing your balance to $1,040.40. This process continues every year, and as your balance grows, so do the interest earnings. It's a simple yet effective way to grow your money. The key to maximizing compounding in a savings account is to find an account with a competitive interest rate and to be consistent with your deposits. The more you save and the more frequently you deposit money into your savings account, the more compounding will work to your advantage. Number 4. Pension fund. The fourth compounding asset we'll explore is the pension fund. A pension fund is a long-term investment vehicle designed to help you save for your retirement. This type of investment works through regular contributions made by you and your employer to the fund. These contributions are invested in various financial instruments, such as stocks, bonds, and more. Over time, the value of your pension fund can grow thanks to the earnings generated by these investments. One of the main advantages of pension funds is that they often come with tax benefits, meaning you can save on taxes while contributing to your pension fund. In many countries, pension contributions are tax-deductible, reducing your taxable income and therefore your tax liability. Additionally, many pension funds offer employer matches, which means your employer will contribute a certain percentage of your salary to your pension fund. Compounding works in your favor in pension funds because the earnings generated by your investments are reinvested in the fund, allowing them to grow over time. With time, these earnings can accumulate significantly. Many pension funds also offer different investment options, so you can choose a mix of investments that suit your needs and risk tolerance. Number 5. Investing in bonds. A fifth compounding asset I'd like to mention is investing in bonds. Bonds are financial instruments issued by governments or companies that pay periodic interest and return the principal to the investor at maturity. Investments in bonds can provide a steady stream of income and the opportunity to benefit from compounding. Suppose you buy a bond with a face value of $1,000 and an annual interest rate of 4%. This means you will receive $40 in interest each year. This interest can be reinvested in additional bonds or other investments, allowing you to benefit from compounding. Upon the bond's maturity, you will also receive the $1,000 principal, which can be reinvested or used as you see fit. Compounding with bonds is often less aggressive compared to stock investments, but it can still be an effective way to grow your money over time. Bonds are often considered safer than stocks, making them a popular choice for investors looking to reduce portfolio risk. In conclusion, compounding is a powerful force that can help you grow your money over time. Stock investments, real estate, savings accounts, pension funds, and bond investments are just some of the options you can consider to benefit from compounding. The key is to start investing as early as possible, remain patient, and let time do its work. Over the years, compounding can lead to significant growth in your wealth and passive income. So there you have it, 5 compounding assets that can make you richer every year. Remember, at VitalCash, we're all about helping you grow your wealth and financial freedom. If you enjoyed this video, be sure to subscribe to our channel and hit that notification bell. That way, you won't miss any of our future wealth-building tips and strategies. Thanks for joining us, and we'll catch you in the next video.